I've made tens of thousands of dollars investing in exchange traded funds over the years, which I believe to be among the best investment vehicles to build wealth passively that just about everyone should be utilizing in their margin and registered investment accounts, as they're a way to easily gain exposure to large groups of stocks without having to spend all of your time researching positions and overexposing yourself to only a few stocks. But there are thousands of index funds to choose from, so how do you know which ones to invest in? Well, I've made a ton of videos on this channel covering ETFs, but it's been a while, and now moving into 2024, I wanted to make an update covering 5 of the best exchange traded funds to buy for the growth of your net worth over time. So coming in at number 5 here, we have a high dividend yield index fund that's main purpose is to provide investors with exposure to high quality dividend distributing American stocks. And that's just what it does, with its roughly 450 holdings providing a dividend yield in the waters of 3.5% as of the time of filming this video. Dividends are arguably the most passive form of income, but many investors get caught up with trying to pick and choose only a handful of individual dividend stocks, which is where a dividend stock fund can very well simplify your life. So like with any other index fund, a dividend focused fund holds multiple positions within one single holding, allowing the investor to gain exposure to the rewards of each individual position. In this case, the Vanguard High Dividend Yield Index Fund invests in a variety of dividend stocks across 10 different industries, and it constantly updates its weighting towards each one. Talk about passive income. Now, one of the downsides of most dividend funds, however, is that high distributing companies tend to experience less growth. So most of your return is going to be from the dividend itself rather than from share value growth over time. But that doesn't mean dividend funds aren't still worthwhile. I've personally held a few for several years, and they offer a more predictable source of income for your portfolio if that's what you're after. Here are a couple of alternative options to the Vanguard fund we just spoke about in case you're in other markets. But if you're looking for a bit more growth to your position while still touching some dividends along the way, the next fund is surely a good bet for you. The S&P 500 is a market index with funds that I've spoken about countless times on this channel, and that you're probably aware of if you've had any interest in investing over the years. Essentially, an S&P 500 exchange traded fund allows you to invest in the 500 largest American companies that trade on the stock market, making it an easy one-click investment to gain exposure to the top American companies. So if you haven't ever invested in an index fund, then this is the perfect first step into this investment vehicle, as it allows you to invest into all of the major American sectors, including IT, healthcare, and financials as the largest weightings. And by default, this means that your investment is gaining exposure to all of the largest companies that you know, such as Apple, Microsoft, JP Morgan, Disney, and so forth, where collectively the 500 stocks held in this fund are worth north of 80% of the American stock market's total value, which is pretty impressive. So coming in at among the cheapest expense ratios for an S&P 500 ETF, we have the Vanguard S&P 500 ETF with an expense ratio that's extremely low, meaning you'd only pay around 70 cents per year in management fees with a $1,000 investment. So you really can't get much better than this. And because the fees charged on this ETF are so low, investment returns are very tightly correlated with the fund's performance, which year to date are up 19%, which is phenomenal for such a low risk and passive fund. And again, here are a couple of alternative options to this Vanguard fund if you're in other markets. So if there was only one ETF to invest in, the S&P 500 would be one of your best bets. And if you're wondering how you can actually go about purchasing your very own shares of the ETFs in this video, well, you'll need a stock brokerage and an investment account. Hey, quick break here to mention a stock market investment platform called Moomoo that's been extremely popular over the past couple of years in the United States and abroad, but is only recently just launched in Canada, which I'm very happy about as I've been waiting on this moment for years. So I wanted to mention it in today's video as it truly has an insane amount of free functionality built right into the platform for stock research. As we can see here in the markets tab, Moomoo Moomoo offers investors the ability to invest in equities and funds from North America, Asia, and Europe, making it an extremely versatile all-in-one stock market investment platform that also offers data and functionality for crypto, forex, futures, and bonds. They currently only offer cash accounts in Canada, but are rolling out the TFSA and RRSP over the next couple of weeks, so make sure to sign up to start taking advantage of their research functionality today. And by the way, they're running insane sign-up bonuses right now, reaching up to $1,500 in cash coupons for your deposits, with a minimum bonus of $20 for any deposit. So even if you open an account and deposit $1, you'll get $20 for free. Again, check out Moomoo down below in this video's description. Back to index funds, the next position remains in the American stock market, but targets a completely different facet of the economy, being the Russell 2000, for investors seeking exposure to small cap stocks and the potential for substantial growth over time. The Russell 2000 index represents the performance of approximately 2,000 small cap companies in the United States, offering a comprehensive snapshot of the smaller, often more dynamic players in the market over large cap stocks. Investing in a Russell 2000 index fund can therefore provide a strategic way to diversify an investment portfolio out of the large players, as small cap companies are known for their agility and potential for more rapid expansion, making them an intriguing asset class for those with a higher risk tolerance. And these companies often operate in sectors where innovation and disruption can lead to significant market opportunities. So a Russell 2000 index fund acts as a one-stop investment solution for those looking to benefit from the growth potential of small cap stocks without the need to select individual companies, which can be much riskier with small cap positions. So this type of fund provides broader exposure to a diverse range of industries, including technology, healthcare, and consumer discretionary, among others. So essentially, with a Russell 2000 index fund, investors position themselves to ride through the waves of innovation and growth inherent in the world of small cap stocks. Here are a couple of alternative options if you're in other markets. Now, if you're willing to take on an even higher level of risk in your portfolio to gain exposure outside of the United States, this is where the next fund may come into play. This might be news to some, but there's a whole investment world outside of the US stock market, with many emerging markets providing potential for significant growth over the next 10 years as countries like China, Brazil, and India continue to increase economic output. Emerging markets, encompassing countries with rapidly advancing economies, offer unique investment opportunities fueled by factors such as industrialization, technological advancements, and a burgeoning middle class. So investing in an emerging market ETF allows individuals to access a basket of stocks, once again, from a diverse range of developing economies such as those in Asia, Latin America, Africa, and the Middle East. And these ETFs typically include companies poised to benefit from rising consumer demand, infrastructure development, and increased globalization. But while the potential for high returns is a key attraction for emerging market ETFs, it's very well essential to recognize that investing in emerging markets comes with increased volatility and risks. Factors such as political instability, currency fluctuations, and regulatory uncertainties can impact these markets more significantly than developed counterparts. However, the long-term growth potential of emerging markets remains quite compelling. So by spreading risks across multiple countries and sectors, an emerging market ETF provides investors with a more balanced approach to participating in the growth of these economies. And although emerging market funds haven't performed to expectation over the past couple of years, the fact remains that their potential over the next decade is undeniable. So at the very least, a small amount of portfolio exposure could be worth looking into. Once again, here are a couple of options for emerging market ETFs. But finally, if you're looking for high growth within the US market, you're sure to like the Final Index Fund. And number one on my list of the best index funds for long-term growth of wealth, it is a NASDAQ 100 index fund, of course. This ETF's goal is to track the top 100 companies that trade on the NASDAQ index, which happens to be highly concentrated in the tech industry with top stocks like Apple, Microsoft, Google, and Amazon that have seen tremendous growth over the past decade, as technology is what advances our society the most. So in simple terms, the NASDAQ 100 index is comprised of some of the fastest growing and most influential companies on the planet, which is why it's consistently provided such fantastic returns to investors. I've personally been investing in this index for nearly 10 years, and it's been one of my best performing positions, especially considering how passive it is. Most NASDAQ 100 ETFs offer expense ratios sub 0.5%, making them relatively cheap to own considering the potential for growth that they offer. Here are some options for NASDAQ 100 ETFs in various markets depending on where you're at. So that covers 5 of the best ETFs to purchase if you're looking to build a well-rounded and diversified investment portfolio. Each of these exchange-traded funds offers a unique approach catering to various investment goals and risk appetites. And if you want to learn more about investing in the stock market utilizing ETFs, make sure to check out my course that's available over on Skillshare that you can find down below in the description. It has over 1,500 students, 7 hours of content, and it is completely free to access. And hey, if you're curious about what I'm going to be focusing on investment-wise in 2024, don't miss out on this video. I'll see you in the next one.